In previous videos, I've talked about accounting methods and the fact that most owner-operators, especially newer ones, are basically running a cash business. You pay for fuels with cash, you pay for tires with cash, you pay for repairs with cash. And in my opinion, QuickBooks Online and Zoho Books are among the best tools available to do that. Just scan the receipt and it automatically becomes a part of your accounting record. The revenue side is a little different. If you're using a factoring company, determining whether you've been paid in full for all the work you've done isn't always as straightforward as it seems. So if you've ever found yourself wondering where the money went, I have something for you. You know, among the many things I've done in my life, I spent 6 years in Asia teaching English to high school students. So I'm going to put on my educator hat and walk you through a simple example. So we'll start with rate confirmation from ABC Brokerage, create an invoice for $4,400, and follow the money through the factoring process. By the end, you'll have a better understanding of where the money went and how to determine whether you've been paid in full. Let's start where trucking starts. This is a rate confirmation from ABC Brokerage. In this example, the rate confirmation tells us where we're picking up, where we're delivering, and most importantly, how much we're getting paid. In this example, the total rate is $4,400. Once the load is delivered, we obtain a proof of delivery. Together, the rate confirmation and the POD become supporting documentation for our invoice. Now, any attempt to explain an accounting concept usually involves T accounts. So let's take a look at what traditional accounts receivable accounting looks like. In a traditional accrual basis of accounting, we've earned the revenue once we've bumped the dock. The load has been delivered, the job is complete. We've done the work, so now we're owed the money. In our example, we create an invoice for $4,400. To record that transaction, we debit accounts receivable for $4,400 and credit freight revenue for $4,400. At this point, ABC Brokerage owes us $4,400. Now let's fast forward 30 days. The invoice gets paid, and under traditional accounts receivable system, the customer who owes us the money is also the customer who sends us the money. We receive $4,400 in cash, so we debit cash for $4,400. At the same time, we credit accounts receivable for $4,400 because the customer has paid us. The receivable goes to zero, and this is where accrual accounting really shines. We delivered the load today, but we didn't receive payment until 30 days or maybe 60 days later. Accrual accounting allows us to record the revenue when the work is performed and the cash when the payment is received. In other words, it helps us manage timing differences. We can see how much revenue we've earned, how much money we're owed, and whether we've been paid, even when the cash arrives weeks or months after the work was completed. For many businesses, it works extremely well. Now, we've seen a typical payment from a customer, but in trucking, things are often a little different. Let's go back to the beginning. We'll start with the same rate confirmation from ABC Brokerage. The rate confirmation tells us what we're hauling and how much we're getting paid. In this example, that's $4,400. Once the load is delivered, we obtain a proof of delivery. The freight has been delivered. The paperwork has been signed. The job is complete. Together, the rate confirmation and the POD become the supporting documentation for our invoice. We create an invoice for $4,400 and send it to ABC Brokerage. At this point, the process looks exactly the same as in the example that we just covered. But this time, instead of waiting for ABC Brokerage to pay us directly, we send the invoice to a factoring company. ABC Brokerage still owes us $4,400. That hasn't changed. What has changed is where the cash comes from. Instead of receiving payment directly from ABC Brokerage, we receive an advance from the factor. In this example, Roadway Factor advances us $3,960. The remaining balance is $440. Eventually, we receive a reserve release of $220. The factor retains the remaining $220 as its fee. At that point, the balance due reaches zero. And this is where things start to get interesting. The customer owes us money. The factor sends us money. Those are no longer the same thing. Factoring is, in many ways, outsourcing part of the accounts receivable function. The factor is tracking the invoice. The factor is tracking the collection. The factor is tracking the reserve. And in many operations, that same information may also be tracked inside a transportation management system. Many TMS systems solve this problem by creating additional tracking accounts and due to from factor balances behind the scenes. Other operators use QuickBook tags, classes, customer filters, or custom reporting to reconnect the customer, the factor, and the cash. Those are all legitimate solutions. In fact, if you're currently factoring invoices and can run an accurate customer aging report at any time, don't change a thing. Your system is working exactly as intended. But that leaves me with a question. If the factor already has the aging and the TMS already has the operational history, what additional value is created by rebuilding all of that information inside the accounting system? For larger fleets, lenders, and companies producing accrual-based financial statements, there may be very good reasons to do exactly that. But for many owner-operators, I wonder whether we're creating additional bookkeeping work without creating additional visibility into the business. In other words, are we generating new information or simply recreating information that already exists somewhere else? At the other end of the spectrum is cash basis accounting. Under a pure cash basis system, we simply record what hits the bank. In our example, the factor sends us $3,960. We record the deposit, we record the revenue, and we move on. It's simple. The problem is it doesn't give us much visibility into whether we've actually been paid in full. The bank account tells us what we received. It doesn't tell us what's still outstanding. It doesn't tell us about the reserve, and it doesn't tell us about the factor fee. This is where I recommend using a modified cash basis approach. Instead of tracking the entire accounts receivable process, I focus on tracking what remains due through the factoring process. The goal is simple. Follow the cash until the balance due reaches zero. At that point, I know exactly what I've received, exactly what the factor retained, and whether I've been paid in full for the work I've performed. Under my modified cash basis approach, we record the full revenue amount of $4,400. We record the cash received from the factor of $3,960, and we record the remaining $440 as due from factor. This gives us the best of both worlds. The full revenue amount is recorded, allowing us to accurately calculate important operating metrics such as revenue per mile. Our cash account agrees with the bank statement because we're recording the actual cash received. And the due from factor balance should agree with the factor's records as the remaining reserve balance. As reserve releases are received and factor fees are recognized, the due from factor balance is reduced until it reaches zero. At that point, the transaction is complete. The books reconcile, and we know we've been paid in full. And there you have it. Use an accounting software with a good mobile app, scan your receipts as they occur, record your deposits as they hit the bank, track your factor advances, reserve balances, and releases using a simple, consistent process. And the bookkeeping just about takes care of itself. The day-to-day bookkeeping for most owner-operators and small fleets isn't especially complex. What it requires is a solid workflow. The sooner information moves from the truck to the accounting system, the easier it becomes to stay organized, monitor profitability, and prepare for tax season. Traditional accounting follows the invoice. I prefer to follow the money. If you're like most owner-operators, you're not lying awake at night wondering who owes you money. You're wondering whether you got paid in full. If you found this video useful, please like, subscribe, and leave a comment below. And if you'd like help setting up a bookkeeping system designed specifically for trucking, I'd be happy to help. Until next time, keep the wheels turning and keep good records.